What is up, brothers and sisters? Hope you're doing well. This is Coach Umar. Welcome to Crypto Apex Predators. This is my first video on this channel, and today we are talking about crypto investors and crypto traders. So a lot of people, when they are new to crypto, when they're beginner, and even some of the people who are experienced in this, who have spent some time in crypto, do not really know the difference between both of them. And it's very important to know and understand that there is a difference between crypto traders and crypto investors. Both of them work with different mindsets. Okay, so let's first talk about crypto trader. Who is a crypto trader? What is crypto trading? When you buy an asset when the prices are down of that particular asset. Now listen carefully when I say that the prices are down. You never buy crypto when it is in green or the market is pumping. There are a lot of people who chase the crypto that is pumping, is in green, or is in the gainers section. So you don't jump into that crypto. That is the biggest mistake most people, and especially beginners, make. There is a high chance of losing money there. There's a big risk. So never jump into the crypto when it's in green. So you have to, whether you are an investor or a trader, no matter what, when you buy a crypto, the prices should be down. It should be in red. So crypto trading is when you buy an asset when it's down in the price, when it's lower down, and you typically sell it for profits within that day, within 24 hours time frame. Now that trade can be 5 minutes long, it can be 15 minutes long, 20 minutes long, half an hour long, hour long, up to 24 hours. So it is also called day trading, by the way. So you buy the asset at a low price and then sell it within that day, within 24 hours for profit. Now this requires you to have a strong grip over the technical analysis, and you should know how to read the charts. So when you want to buy a crypto or an asset, you are going to read the chart and you will see the high of that coin and the bottom of that coin in that particular day in a shorter time frame. You will select the short time frame, and then you will buy that crypto somewhere in the middle or close to the nearest bottom. And then you will wait and see the charts throughout the day, throughout that time being, and you will set your targets, and once it goes up, you will sell at the desired level. Now remember that this technique does require a lot of time, knowledge, efforts, and most importantly, experience. So if you are someone who have got a lot of time, you can pursue this. Also remember that this requires a good amount of capital, a decent amount of capital, if you want to make decent amount of gains. If you're a beginner and have got only $100-$200, I don't recommend doing this, especially without a mentor. And also if you go with a low capital, you won't gain a decent amount of returns. So you gotta go with a good amount of capital if you want some decent gains in your crypto trading or day trading. Now what I personally follow is investor strategy, and I also recommend that because it works for 95% of the people most of the time. It's less mentally tiring and less exhausting, doesn't require too much expertise in your technical analysis and stuff. Moreover, if you are someone who have a full-time job or a business, have kids to look after, wife, family, you have bunch of other priorities, and you cannot keep that your eye on the charts all the time, then this is the bestest strategy to not only make a decent amount of gains in a longer run, but also it's mentally less exhausting. Yeah, you might not gain quick profits in a short amount of time, like in the scalping strategy, like the day trade or scalping strategy where you gain profits within 24 hours. Yeah, that's not necessary, but in a longer run you will get good profits without much hassle. Now what you do in investment strategy is that you buy the bottom of that particular crypto or an asset. Again, you look at the charts, you see where the market is going. You see that your XYZ crypto is at bottom. It should be in red. Okay, market should be in red when you buy it. Your crypto fear and greed index should also be in fear, most probably. That's the best time to buy, when the cryptos are at the most discount. Bitcoin is crashing, market is in red. That's the time where you buy the crypto. Now let's say you want to invest $500 in XYZ crypto. You never make this mistake of putting all your capital at once. Never do that. Always buy in parts. So let's say you bought that XYZ crypto at certain level, it's at the bottom price. Let's say, for example, 0.20. Okay, you invested $200. Okay, you are not going with the full capital of 500. You invested $200 and you have $300 at your back end. Now you will see, you will look at the charts. You don't have to look at the charts all the time, by the way. Okay, so you will see, you will notice, and if your crypto goes up from right there, good enough. If you want to book profit, go for it, good for you. So let's say your asset dropped down 10% more from the price, at least 10% more. Okay, so don't FOMO when you know it's just $1 or $2 down. Like for example, you invested 200 and now you can see that you know, you are on a loss and your capital is left with $198 and you are doing FOMO that, oh my god, I lost $2. No, don't do that. Okay, so let it come down at least 10%. Okay, and then you will do DCA, dollar cost average, like the amount we left at the back end. We invested $200 and remember we had 300 you know, saved for this kind of a situation, and now you will inject let's say 100 or 150 or 200 more at this particular point. Let's say it went further down. So from 0.20, your buying price, it went all the way down to 0.15. You injected 100 or $200 more, and now it's further down and it's at the price of, let's say, 0.12 or 0.11. You invest and inject more money that you had at the back end. Now what this gonna do is your dollar cost, this is called dollar cost averaging, DCA. This is the term we use. So you will have a good average price and you have bought at every, you know, every downfall you have bought that crypto. So in a longer run, eventually it will rip and you will get profits. So it's a game of patience. You should be mentally and emotionally very strong and you should have patience, and eventually you will end up in a good profit. So I personally think this strategy works for most of the population. It's easy, it's less stressful, but do not get into the dogma that this strategy doesn't require any knowledge at all. Of course, the crypto you are buying, you should know why are you buying that particular asset. You should have some sort of fundamental knowledge, your fundamental background. You should learn about that. So you should know what is the narrative of that crypto, the team. You should, you know, make a complete checklist, which by the way I teach in my Sharks community as well, that is paid. So you should have strong fundamentals with you, so you know that the crypto you are buying is actually worth buying. So yes, you do require knowledge there at that part as well. And also, by the way, if you are a new investor, if you're just coming into crypto, you should keep this in mind, that crypto is 10 times more riskier and volatile than all the other market, whether it be forex, stock market, or whatever it is. Crypto is 10 times more riskier and 10 times more volatile. So you should be mentally prepared for that, and don't think that, you know, now I'm gonna become a crypto trader and I can earn a lot of money in a very short amount of time and you know, quick rich fix, you know, kind of scheme. It's not like that. Okay, there's literally not a single investor or crypto trader who did not lose money in crypto and made just profits. It doesn't work like that. Be ready to lose money as well in crypto. So come in this market with risk tolerance and know that you can definitely lose money. In fact, most of the investors and traders does lose money before you make good profits. Moreover, you need to be comfortable, you need to start becoming comfortable with seeing your portfolio down, and seeing the market in red. It will be, most of the time it will be in red. The market will be crashing, the market will be down, your assets will be down, your portfolio will be down, it will be in red. So you need to be comfortable to see your portfolio in that zone rather than looking at it in green all the time. It's in green less than it's in red. Like you can say it's in green 20% of the time, but in red 80% of the time. I also highly advise you to hire a mentor. If you are a beginner and have no idea about the crypto market, I would highly advise you, whether you are you want to be a crypto investor or a crypto trader that we just explained, but you need to have a mentor so you don't make all those mistakes that most of the beginners, 99% of the beginners make. So you will be always one step ahead from all the other beginners. You will be in that 1% who will not make those common mistakes. So it will be helpful for you. So a little bit of investment on any good mentor is much better than losing money in the crypto eventually. That being said, I hope you enjoyed this video and learned something out of it. If you did, then please drop a like below on this video and subscribe the channel. Moreover, let me know down in the comment section below that what strategy are you following or planning to follow. Are you a crypto investor or a crypto trader? Also, we have a free WhatsApp community. I am gonna drop the link to the community down below in the description or in the first comment, so you can check it out and join if you really want to learn and or you want to get some market updates 24/7. Thank you so much for watching this video. I will see you in the next one.